Today we are analyzing Reliance. Recently, Reliance was suggested as a sell because it was showing divergence. And after this, you can see Reliance had a good fall. Now, the divergence is a leading indicator and it often shows you what may happen in future. And if you see on this chart, there was a good divergence here. And so we were not confident enough to trade this breakout. Now, most often the breakout reverses. The reason is divergence. Whenever there is a divergence, it means momentum is lacking and you may get a reversal. Now, what can be the possible structure that we can get for this stock? Now, if you see what are the possible moves, since you can see there is a divergence that is appearing, so we may get a corrective structure. Let me, what sort of look it will have. If you see this look, so this is one possibility because there is divergence. It can show you this. One more structure that is possible is if you capture this. So one impulsive move is also possible because divergence. We can get a next big up move. And another structure that is possible is this fall. So So it means that we have to be flexible enough that one analysis is not always true because it all depends on what kind of structure you're getting. If you get a follow-on move and this keeps on going down, then that means that will be no divergence and it will keep on continuing like this. So if you get a follow-up move downwards and then the only trade left to us is to wait for a correction and trade this. However, looking at this now, if you get an up move, then you have the chance to trade this a, it will be in the form of ABC. Then you have the possibility of trading the B and C wave and then this down move. So now suppose on Monday you get you start to get an up move. That will be the first wave. So first wave, even if it is corrective or that it is impulsive, so you think that the now stock is going upward, right? Your analysis says that either it goes up in a corrective way or it goes up in an impulsive way. In both ways, it has to give some up move. Now you will wait for the first wave to get form. After this, you can trade the follow-up wave B and C and then downwards, or B or C and then upwards. So on the basis of what sort of structure that gets formed, you have to trade. Now internally, let us see how exactly on a 4 hours we can do that. Now if you see the 4-hour chart, you can see between this and this there was a divergence. So afterwards we let this A wave to get formed and then we have to trade this B and C wave and then this. So for this, let us go to the hourly chart. Now hourly chart, if you go to the hourly chart, you can see that this was the first, let me mark it. So this was the first attempt to go up, followed by a corrective pattern and this. So after this, now you don't, at this moment, you don't know whether this is an impulse to the upside or this is a corrective pattern. But you are sure that now, since if you go to the lower chart of this, there will be a divergence. Now you expect some correction. So you can trade this after getting this. Now, if you are, I mean, if you know about the patterns, then this pattern is nothing but an expandable flat. So this is a corrective pattern and usually comes in corrective waves. So after this pattern, now if you let me remove it quickly. Now if you calculate this, now if I draw Fibonacci of this, so you can say this exactly comes as the twice of this wave. So these are the possible targets then you can expect. And if you see this C wave, if you draw a Fibonacci of this, so this is around 0.27 of this A wave. So these are the possible targets. And if you are trading this C wave from this, so this is the point where you can book. Now suppose looking at this structure, if you again get a similar structure like this here, this is a hourly chart. Now suppose if you get on an hourly chart, you again get this structure. So you know now after this, you are expecting one move down. that may be in this form or some other corrective pattern. So depending on that, you can trade this next down move. And then let me copy it again. And depending on that, now if you draw this trend line here, so you are expecting one up move here. So this is not nothing but impulse correction, impulse correction, impulse. So you are expecting a similar upside basically if you draw a trend line, and from this you are expecting up move. So all these are possibilities, and this is how you can capture them. Now looking at old charts, old scenarios, you can try to find them on the chart again, and in this way you can trade. So I hope this helps, and if you have any question, you can post them as comment. If this delivers value, please consider subscribing.